Schlumberger, the oil services giant, reported their full year 2023 earnings on January 19th. Earnings expectations were surpassed or missed, depending on which Zacks Equity Research news article you read. The beat estimates article used earnings per share that excluded charges and credits, while the missed earnings article used GAAP earnings per share. Good job, Zacks. At any rate, Schlumberger's full-year revenue was up 18% year-over-year to $33.1 billion. Gross margins improved to 20%. Operating margins were 16.4% or $5.4 billion. Pre-tax profits stood at $5.3 billion, and the bottom line was up 22% to $4.2 billion, or about 12% of revenue. Schlumberger's market cap stands at $71.6 billion. We put together a 5-year income statement graph to measure compound annual growth over that period. In 2019 and 2020, Schlumberger wrote off assets of approximately $13.1 billion and $12.7 billion respectively, which sent the shares to 20-year lows. We removed those two extraordinary write-offs out of our 5-year income graph to see that net revenue growth has been flat since 2019. Gross profit has been growing at 9.2%. Operating profit has been growing at 12.6%, and net income at 6.9%. We also included the 3-year compound annual growth rate as a comparison of performance so as not to include 2019 and 2020. The 3-year performance has been impressive compared to the 5-year. Business segment revenue from 2019 shows that 5-year compound annual growth rate is understating Schlumberger's performance. If we look at the growth since the last big write-off in 2020, the 3-year compound annual growth rate reveals a more solid performance. Their digital integration business has a compound annual growth rate of 5.6%, growing to $3.9 billion. The reservoir performance segment achieved a growth rate of 12.6% to end 2023 at $6.6 billion. Well construction, their biggest revenue source, has been growing at nearly 16%, with a total revenue of $13.5 billion. Lastly, production systems revenue posted a 13.6 3-year growth rate, realizing $9.8 billion. Looking at breakdown of revenue by country, 3-year growth rates outpaced 5-year growth rates. The North American business contracted immensely from its 5-year peak of $10.4 billion to bottom out at $4.5 billion in 2021. We can surmise that the big write-offs in 2019 and 2020 were in this market. Since then, however, this region has seen growth of 14.6%, improving to $6.7 billion at the end of 2023. In fact, each geography has grown between 11 and 15% in the last 3 years. Latin America up 14.2% to $6.6 billion, Europe and Africa up 14% to $8.5 billion, and the Middle East, the largest region for Schlumberger, has been growing 11% to break $11 billion in revenue. Let's look at the multiples. There was 6 million extra shares outstanding at the end of 2023. That being said, earnings per share was up 21.6% to $2.91. Sales per share improved by 17.5% year over year to $23. Cash per share jumped 69% to $2.76. Book value was better by 18.2% to $14.80. The price-earnings ratio was 17.04, lower than the S&P 500 at 26.27. PE growth came in at 0.79. Leverage ratios all improved, with debt ratio at 0.23, debt to equity at 0.51, and interest coverage at 10.8. Liquidity ratios also improved, with the current ratio at 1.32, the quick ratio at 0.88, and the cash ratio to 0.3. Return on assets were 8.8% better by 10% year over year. Return on equity posted 19.7%. Schlumberger has an equity multiplier of 2.25. Return on capital employed improved by 18% to 15.8%, and return on invested capital was 8.7%. The company's cash flow also much improved. Operating cash flow was $6.6 billion, up 78%. Investing cash outflows were nearly $2 billion. Financing cash flow was negative $660 million, and free cash flow to the firm was up 144% to $4 billion. Schlumberger paid 91 cents in dividends last year, yielding 1.84%, growing 54%. The company also announced a 10% increase in the quarterly dividend and increasing share purchases for 2024. Schlumberger's enterprise value is $78 billion, which is a 2.37 multiple of revenue and a 19.4 multiple of free cash flow. Market capitalization to net income is a 17 times multiple. Guidance was given that international revenue would grow by mid-teen percent, so we used 15%, and North America by mid-single digits, so we used 7%. And based on these numbers, full year 2024 weighted revenue is expected to be $37.3 billion. We used the 2-year average for gross margin at 19%, an EBIT of 15.5% of revenue, and full year net income of 12% of revenue for a grand total estimate revenue of $4.48 billion. That would give an estimated EPS of $3.13, which equates to a forward PE of 15.85. Key takeaways on the pro side are the financials are strong, results were good all around. Schlumberger has lots of cash. Growth is across all geographies and business lines. The dividend yield is good and growing. On the con side, tensions in the Middle East could halt projects. The possibility of the Ukraine war expanding could also hinder projects. And the green agenda wants to cancel big oil. Despite the risk, we rate Schlumberger's stock a buy. We have no exposure to this company. Like and subscribe.